But what's really going to be moving the needle when it comes to your interest rate? Well, to better understand that, you need to know this right off the bat. You have an interest rate, and then you have a price for that rate. The price for that rate is super important because this is what a secondary market known as Fannie Mae, Freddie Mac, these are going to be charging a lender a certain percentage for that rate. And this is also known as discount points. So again, you have your interest rate and then you have your pricing for that rate. Depending on your qualifications are going to be a huge significant difference in your loan level price adjustments, LLPA. And a lot of consumers don't realize this because when they go to bankrate.com or one of these lending websites, understand that that website is purely designed to generate a lead. It's not generated to give you specifics to your exact pricing scenario. So you could be at a 776 credit score and your next door neighbor is at a 780 credit score. Well, guess what? There is a loan level price adjustment difference between having a 780 plus credit score and being under 780. So maybe identifying the ways to increase your score by 4 points can be the differential on acquiring not only a low rate but at a cheaper cost. So what do you mean by a low rate and cheaper cost? Well, let's say Tom, Dick, and Harry all are trying to purchase the same model of home in the exact same neighborhood. And they all qualified for a 3.5% interest rate. They all work at the same job and they all make the same level of income. So what's going to be the difference between all of them? Well, obviously lifestyle and some of the decisions that they made for their credit profile. And also depending on the down payment that they're going to be using. And coupled with that, the program. Whether they're doing a VA loan, an FHA loan, or a conventional loan, there's going to be differentials between all those. But the main components are going to be the program that you're choosing, the credit profile, the loan size, and also your down payment. Those are the 4 components that are going to influence your interest rate the most when it comes to getting ready to go into a lock position. So it's important that you have this conversation up front with your financial institution, your mortgage lender, identifying what kind of loan level price adjustments are going to impact me. And when the market makes a shift, what is it going to look like when it comes to my interest rate? Should I lock now or should I remain in a floating position because there's more favorable pricing down the road? Last thing I want to share with you is this. Now, on a technical side, there's what's called mortgage-backed securities. So this is basically where investors just buy big buckets of loans. Everyone that fits that scenario, 680 plus credit score, it's a conventional loan, it was a purchase product, they did 15% down, they buy these in buckets. And then when they're purchased, they're sold at a certain interest rate. So that investor's gonna be making money off of that. This is a crash course way of explaining secondary market. That's important because a 3.875 versus a 3.625 could be pricing out different, meaning a 3.625, the adjustments could be lower than a 3.875. And when that happens, that simply means that there's a bigger demand for that bucket of interest rate of that qualification of borrower that investors are looking to purchase. That's why it's ultra important to be joint at the hip with your mortgage professional before you get into a lock position. This way you can see where the market's at, understand where the market's at, and there could be a dip in the market where investors are purchasing bigger batches of a lower rate that you could swoop right in and capture that lower rate. So understanding loan level price adjustments is the first step to understanding how your interest rate is going to be affected during the home buying and home refinancing process. If you guys have additional questions about interest rates, please leave your comments below. I'll be more than happy to reach out to you on a one-on-one. Hopefully this information served you well. I'll talk to you real soon. Bye now.